ಎಲ್ಲರಿಗೂ ನಮಸ್ಕಾರ. ನನ್ನ ಹೆಸರು ಮುರಳಿ ಮೋಹನ್ ಬಿ, ಸಹಾಯಕ ಪ್ರಾಧ್ಯಾಪಕರು, ವಾಣಿಜ್ಯಶಾಸ್ತ್ರ ವಿಭಾಗ, ಸರ್ಕಾರಿ ಪ್ರಥಮ ದರ್ಜೆ ಕಾಲೇಜು ಕುಮಟಾ. ಪ್ರಿಯ ವಿದ್ಯಾರ್ಥಿಗಳೇ, ನಿಮಗೆಲ್ಲರಿಗೂ ಡಿಜಿಟಲ್ ಲರ್ನಿಂಗ್ ಸಿಸ್ಟಮ್ಗೆ ಸುಸ್ವಾಗತ. ಕಳೆದ ಕ್ಲಾಸ್ನಲ್ಲಿ ನಾವು ಒಂದು ಪ್ರಾಬ್ಲಮ್ ಚರ್ಚೆ ಮಾಡಿದ್ವಿ 15 ಮಾರ್ಕ್ಸ್ ಮೇಲೆ. ಮತ್ತೆ ಈ ದಿನ ನಾವು ಮತ್ತೊಂದು ಪ್ರಾಬ್ಲಮ್ ಅನ್ನ ಚರ್ಚೆ ಮಾಡೋಣ. So here I put one problem here. Basava Publication agreed to take over printing and sales of a book from the author Shamala. The following are the terms of agreement. Royalty payable is rupees 20% on the sales price of the book. Price rupees 50 per copy. Author is to be paid the minimum rent is rupees 20,000 per annum. They given from 2008 to 2012 or up to 5 years. Number of copies they are sold. Here, Basava Publication will become lessee. Shamala will become lesser. First, we'll see what are all the entries you have to made in royalty charts. We all know that royalty charts we have here number of copies sold, royalty per copy, actual royalty, minimum rent, short working, surplus. So status of recovery of short working, under that short working recovered, short working carry forward, short working it is not recovered, payment made to landlord. See first year, first write year, number of copies sold. First write year from 2008 to 2012. Number of copies sold as per the problem, whatever they given 400, 750, 1600, 3000, 4500. So royalty per copy 50-50 for all the years it is constant. Then we have to find actual royalty. See, they given 20% of the actual royalty. First year, in the year 2008, they're selling 400 copies. Royalty is 50-50. Total sales become 22 lakhs. 2 lakh into 20 by 100 will get actual royalty of rupees 4,000. Minimum rent is 20,000. Your actual royalty is less than minimum rents. We have short working of rupees 16,000. We don't have any surplus, nil. Short working recovered is also a nil. So entire 16,000 we can carry forwards. There is nothing is recovered. Finally, payment is more. Whichever is more, and compare between actual royalty and minimum rent. Which one is more? You have to make payment. 20,000 as payments. For the year 2009, number of copies sold is 750. So royalty per copy is 50. So we'll get total sales as rupees 750 into 50. If you multiply 750 into 50, we'll get at total sales is 37,500. So out of 37,500, you have to calculate actual royalty is 20%. If you divide 37,500 into 20 by 100, we'll get actual royalty of rupees 7,500. So minimum rent is rupees 20,000. Again, actual royalty is less than minimum rent. We are short working of rupees 12,500. Surplus is nil. Short working recovered is nil. So total short working your carry forward is 2008 16,000. This year we have 12,500. Total will give a carry forwarding 28,500. So final payment made is rupees 20,000 based on whichever is more when comparing between actual royalty and minimum rent. For the year 2010, so number of copies sold is 1,600. So actual sales is 1,600 into 50. We'll get 80,000 as sales. So 20% of royalty means we'll get 16,000 as actual royalty. Minimum rent is rupees 20,000. Again, we have royalty is less than minimum rent. Short working is rupees 4,000. We don't have any surplus, nil. Short working recovered is nil. So total short working your carry forward is rupees 32,500. That is 16,000 plus 12,800 plus 4,000. We'll get 32,500 as carry forwards. So payment made is 20,000. Next we'll see 2011. So number of copies sold is 3,000. So 3,000 royalty per copy they give 150. 3,000 into 50 will multiply, will get 1,50,000 as sales. So actual royalty will become 1,50,000 into 20 by 100 will get 30,000 as actual royalty. So minimum rent of rupees 20,000. Here we have actual royalty is more than minimum rents. We have surplus of rupees 10,000. So 10,000 we have short working carry forward is 32,500. So out of 32,500 we can recovery only 10,000. So carry forward is 16,500. The 6,000 is because of the given agreement as whatever we're getting the first year short working we have to recover it in first 3 years. See whatever we find in 2008 16,000, entire 16,000 we have to recover in before 2011. But we were able to recover only 10,000. So 16,000 minus 10,000, it is recovered is 6,000. Again, your payment made to landlord is rupees 20,000 because we have 30,000 actual royalty. Out of that, we are recovering 10,000 as previous year short working. So payment made is 20,000. So you see 2011. So the copy sold is 4,500. So actual sales will become 4,500 into 50 will become 2,25,000 as actual sales. So royalty is 20% means we'll get 45,000 as actual royalty. So minimum rent is 20,000. Again we have short work royalty is more than minimum rents. We have surplus of rupees 25,000. So finally payment made is 28,500 because we have short working of rupees 16,500 rupees previous year. So we have to make payment of rupees 28,500. This is royalty charts. Let's prepare royalty accounts. So royalty account we have to see whatever the given based on the royalty charts. So whatever the amounts we have royalties we are getting, all the royalty amounts we have to put under the debit side to transfer to the lesser accounts. The same amount transfer to the P&L accounts. Next, prepare Shamula account. It is also called as lesser accounts. So whatever cash you are paying it, so based on payment made to landlord. So first year cash paid to less Shamala is rupees 20,000. It is combination of royalty and short working. Royalty is rupees 4,000. Short working is 16,000. So 20,000, 20,000 is balanced. Second year cash paid to Shamala is rupees 20,000. So a combination of royalty and short working. So royalty is 7,500. Short working is 12,500. So in third year, you have cash of rupees 20,000. So it is combination of royalty and short working. Royalty is rupees 16,000. Short working is 4,000. So fourth year, we have recovering of short working. So cash paying 20,000. Short recovered is 10,000. So we'll have to pay 30,000 as cash payment to the landlords. In 12, again, we are paying cash 20,500. Recover short working is 16,500. Actual royalty is 45,000. So this ends Shamla's account. The last account is short working accounts. We have to put according to the royal charts whatever the short working we have. If it is any recovered or not recovered. So first year 2008 we have short working of rupees 16,000, not able to recover, so balancing carried down is 16,000. 2009 we have first year's 16, we have to brought down. You have to write second year short working rupees 12,500. Total will get 16,000 plus 12,500 will get 28,500 as short working. So entire amount is balance carried down. 2010 we have balance brought down of rupees 28,500 and 2010 short working rupees 4,000. Total will get 32,500 as total. Same amount is carried down. For the year 2011, the balance brought down is 32,500. So in 2011, we are able to recover previous year's short working amount rupees 10,000. We're not able to recover first year's is rupees 6,000. So total will get uh, 32,500. Finally, last year's cash payment to short working we have 16,500. So enter we are able to pay it. So these are all the accounts we have to prepare during when they ask for 15 marks. First prepare royalty chart accounts, prepare royalty accounts, prepare lesser accounts, prepare short working accounts. Thank you.